Hi everyone, so today I'm talking about a stock which I've heard of before and I've been looking at, and this is called the Global X SuperDividend Real Estate Investment Trust Exchange Traded Fund. Look, I know it does have the name that you would almost expect like a toddler to come up with for like a make-believe superhero, like Ultra X Superman. It's just really, it makes you wonder how they came up with this. Obviously, they were just sitting down and they thought, hey, I wonder how many cool words we can throw into this name. So besides all that, this is a really interesting ETF I wanted to talk about today. And I believe that you may be interested. Just wait a second. It's honestly really, really cool. So now, to save me from stuttering every third word, I'm going to refer to this by the ticker code or by, quote, this ETF, because there is no way I'm going to pronounce that whole monstrosity of a name again. The ticker code for this ETF is SRET and it is listed on the Nasdaq. So now, what actually is SRET? This ETF invests in the top 30 dividend-producing real estate investment trusts globally. So now, the actual purpose and the main role of this ETF is to purely deliver huge dividends to its holders. And it does this by investing itself in the top 30 dividend-yielding real estate investment trusts. These real estate investment trusts get all that money from their huge rental yields, which they can deliver to the ETF, which can then deliver the dividend towards us, the investors. That's honestly like solving a math equation just to hear myself even saying it, so I'm really sorry, but I hope that makes some sort of sense to you. I may have honestly overcomplicated it. It's not that really complicated, I just sort of complicated it. You're welcome, guys. So now, in my opinion, this dividend yield is going to fluctuate and change a lot more than most ETFs would. And this is for a variety of reasons. However, the top two reasons is number one, that it is purely invested in real estate investment trusts. This is a big factor because real estate investment trusts typically don't have a huge fluctuation in stock price. They're not for the purpose of growth, they're more for the purpose of providing cash flow through dividends. So because of that, when market conditions change, such as rental yields for properties in the area, a lot of things really just change the dividend yield. That's where the performance is rather than growth. And then the second reason is simply just because this real estate investment trust ETF is only invested in 30 real estate investment trusts. That means that each real estate investment trust would be around a 4% part of the portfolio in total, the net assets, meaning you would see quite a bit of a difference if maybe one of these real estate investment trusts had an issue, whether that be a cut to their dividend yield or maybe one of their industrial properties burned down, a shopping center, something like that could have a big influence, meaning the dividend yield is going to fluctuate for this ETF. So now, at the current time of recording, it's currently the 23rd of May, this is a Sunday, and the stock price of SRET is at $9.88 a share. The current dividend yield is lying around 6%. A cool little bonus about this dividend yield is that it's actually distributed monthly, which is especially good if being used as a rather primary source of income, a nice constant passive income flow, meaning this could be a type of ETF to retire on. But what gets really, really interesting, and this is why this real estate investment trust ETF actually caught my eye, and that's because take a look at the prices some time ago and what the dividend yield was at. From February last year, the price is down over 36%. It is absolutely tanked and not recovered very well. And if we look back at the 31st of March, SRET has a dividend yield of 18.85%. I know it's honestly incredible, 18.85%. That's one of the largest dividend yields I've probably ever seen. And if that's one of the larger dividend yields you ever seen, make sure to like the video down below because honestly, it's incredible. Honestly, can you even believe that? It used to have an 18.85% dividend yield and it's fallen over 36%. Does that mean that this is a great opportunity to buy in wait for it to return to where its price used to be, and then just live off, hopefully, the recovered dividend yield? Well, maybe. But you really do need to weigh up some other factors, and you need to properly know what's going on with this ETF. So now the total net asset value of this ETF is currently at $506 million, with 51 million shares outstanding. The total expense ratio is also at 0.58%. This may seem a little bit high for some of you, especially for an ETF. Sometimes we can see much lower. However, this still isn't incredibly high when you compare it to other types of funds, such as mutual funds. Obviously, they have a lot more. But once again, for an ETF that really isn't very actively controlled, this is, in my opinion, a little bit too high, but that's completely up to you. So something I think is really important to look into, especially for an ETF like this, is where exactly are its holdings. So we'll take a look at their top 10 holdings right here, because they only have 30. And as you can see from their top 10 holdings, some of them are a little bit more unknown, especially to me. I actually live in Australia, which if you do too, make sure to subscribe to see more videos just like this one from me. And if you don't live in Australia, make sure you also subscribe so you can see more videos just like this from me. So anyway, since I'm Australian, I don't really know many of these real estate investment trusts. Although I do actually notice Dexus there, which is an Australian ASX listed real estate investment trust that owns a lot of commercial industrial properties and different office spaces across the country. However, all the other top 10 holdings to me are rather unknown. I don't know if this is because I live here down under in Australia and I just have no idea what's going on in the US, or maybe they are just more unknown companies. However, out of the other 9 top 10 holdings, I really have not heard of any of them. At least I don't think so. Now, this could be simply just because I'm living down under in Australia and I don't have much of a familiarity with the US investments, or it really could just be because these are more unknown, as they were really aiming for high dividend yielding real estate investment trusts. However, something I was actually really glad to see is that their largest holding was at 4.1%. Now that to me is actually a really good sign, because that means that no other holding is any more than 4.1% of the total net assets. I do think that's a good sign, because it means that even though there's only 30 real estate investment trusts they invested in, it does mean that it's very nicely balanced out around the 3 and 4% mark. And then we can also take a look into the country breakdown of where their real estate investment trusts are. So we can take a look here and we can see that, no surprise, but majority of the investments are from the US at a whopping 70.4%. But you know what, that's okay, because Australia is coming in strong with their solid 9.7%. Go Australia. Not quite as impressive as the US. However, it is nice to see that Australia is part of this portfolio and the net asset investments. I do think that's because here in Australia we actually have pretty high dividends. However, you can see that the other countries included are Canada, Singapore, and Mexico. So now, do let me know down below, what are you thinking? Do you have any strong opinions on SRET? It's a really interesting ETF, and it's something I've been looking at for a little while now. It's not something I think I'm really going to invest in anytime soon. However, it's something I do wish I did invest in, since if I was holding this since April last year, I would have almost doubled my money right now just in growth. Not to mention, I am expecting we are going to see a little bit more of a recovery, and hopefully the dividend yield can recover to where it used to be. It would be honestly incredible if we saw it go back to above 18%. However, I wonder what will happen, and we just have to wait and see. And then go ahead and watch this video just there. This is a video that I've made about why a side hustle is much more necessary in becoming a millionaire than you would think. It saves you so much time in terms of becoming a millionaire, and I was honestly very surprised when I made the video, because I did all the research and studies and I did some calculations to see just how much quicker a side hustle can get you to being a millionaire. So if you're interested in that, go click that video, and if not, hopefully you've subscribed and I can see you all in the next video. Thank you, and I'll see you guys later.